For teaching purposes, in today's video, I'm going to go over an old setup that we had that was posted on this site on Monsanto. And this is actually a weekly chart. If you look at the general pattern was higher highs and higher lows. So when we were trading down at that time, what I wanted to do was look for possible support or something that might tell me that we could terminate the decline in Monsanto at that time. So typically I like to start with symmetry projections. So I'm going to take some of these prior declines within this larger uptrend and project from the high at that time, which was the February high. Okay, so I've got one swing there, I've got another swing here, another one here. Now this one we would have already gone through. Okay, so that one is no longer valid because it violated the zone. So we have some pretty good symmetry projections right there by itself. So then on top of that, what you want to do is run all possible retracements of the prior swings. So the lowest low to the ultimate high at that time, and then I'll take the higher lows to the ultimate high. And here's another swing right here. And actually, let's look at this one. We may have gone through the 786. Yeah, we went through the 786 at that point. Okay, so you get rid of the levels that the market has already gone through. And I also get rid of the levels that are not really close to the current activity at that time. And we started having a nice cluster build up here as far as potential support. Now we could also use some of the minor swings here, but I'm not sure we have any extensions that would make sense at this time. It looks like, okay, we had a 1272 and a 1618 that were violated. The only extension that would have held in this case would have been the 2618 that came in below the market. Okay, so we had two standout price support zones for a decision. Okay, so that was the setup. And yes, this is an example of one of the trade setups that works. And many of the setups are violated every single day. But what you need to do with these is wait and see if you get a trigger that tells you that it's worth placing a bet against it. And one of the most important things that I saw here when I was looking at this chart was the symmetry in both price and time with one of these prior swings. We had a 15-week decline that was $14.39 versus a 15-week decline that was $14.25. So I felt pretty good about this setup because I knew that if it broke underneath this support, that it probably wasn't going to work. And also the risk reward was pretty good because if it did hold, which it did, we knew that the initial upside target, I'm going to have to show all the projections on this one, was the 1272 extension. Target number 2 was the 1618 extension. And we did make target number 1 and eventually target number 2. We are short of target number 3 though. Okay, now it doesn't always work like this. I also do post some of these charts where you just blow through the zones. But as far as the formula for making money with this work, it's setup plus trigger equals trade entry, and then you manage it. If you see a setup and you don't see a trigger, you don't take the trade.